Hello everyone, I'm going to be going over how to utilize higher time frame inversion fair value gaps for lower time frame entries and aligning them properly with the time frame alignment. So to get started, hop on a TradingView, search IFVGs. It's a public indicator and you can plot it on your chart. And so when we do so, you'll see with the default settings, it'll look exactly as it's presented. Just inversion fair value gaps and liquidity pools. We're going to have to customize a little bit of the settings in order to understand the concept that's going to be in this video. So I'm going to turn on show entry zones. I'm going to perhaps turn on show higher time frame fair value gaps, but we'll see about that. Mostly just turn on the entry zones, as we can see there, and we can leave off for the current moment liquidity levels. So what we have displayed is going to be those inversions here, along with the bullish ones. So now that we have them set and ready to go, we're going to next have to understand the time frame alignment concept. So we're going to align two time frames together. Let's try to look at a 15-minute alignment with a 1 minute or 2 minute opportunity. Okay, so if you're unaware of what that means, it simply means we're aligning two time frames together. One, which is the higher time frame, that gives us our point of interest, our directional bias, and the lower time frame entry gives you the entry, and you're fractalizing that entry. What that means is the same technique we're using here on the 15-minute, we're going to use on the 2 minute or the 1 minute. Okay, so what we do is we're going to go and check out what happened over here with this price action. So the indicator, it's going to mark it out for you. Again, this was a public one, so you can just find it on TradingView. But here you can see there's a bullish inversion and a bearish inversion. So this entry zone box, what is that? Well, it's marking the confirmation bar close and the pivot high. So if you're unaware of what a IFVG is, very simple concept. We have a fair value gap, right? There's a bullish one, wick high, body, no overlapping wicks, wick low. That's a bullish gap. And because price closed through that on this bar here, that has become inverted. So we're looking for bearish price action to take place from there. Now, before I continue here and looking at the lower time frame for an entry, I do want to mention this is more powerful when you have the overall direction of the higher time frame as well. So just briefly here, we can see that there is failure swings on the pivot highs, and price is really struggling to take out any highs. So it's definitely a little bit bearish here. And if we zoom out further, we can see that there's more pivot highs and failure swings. So all we have to do now at this point is look at the 15-minute. Great, we have our entry zone. And so here, we're just going to mark that out. And that's going to become our hotspot for an entry on the 2 minute and the 1 minute. So targets, that's the next idea. Because now we have pretty much our opportunity, right? This is our entry zone. Now we have potential targets. That's the next idea. We're not just going to jump into an entry and use this as a pattern. That almost never works, by the way. You really, if you're going to use discretionary trading, it helps to have a proper target. So here we have a pivot low. That's a pretty obvious one. If you go back to the 15-minute, we also see that there is a fair value gap here that we can use. Another one here that is untapped for the current moment. So if I zoom in here, you can see how there's a balanced price range right in the middle. Two overlapping fair value gaps. That's what it means. There is a bullish gap here. But as you can see, it's pretty close to the entry zone. So it's probably not the best to use this as a target. It's way too close. What we can do is break this down. So now we have this lower area of that fair value gap. And what we can do is get the midpoint as well. So the midpoint right there. All three are valuable targets, but because price is super close to that one, we're going to focus on these two targets down here. Okay. So now that we have our targets, let's go into the 2 minute and see if we can spot an entry on the 2 minute or the 1 minute. Okay. And so we're just going to go to the 1 minute here, and we're going to use the same fractal entry, meaning the same concept, inversion fair value gaps. So now we're going to wait for the indicator to plot a bearish one if it forms away from that zone. So there's a bullish one. Let's see if it plots a bearish opportunity. Boom, there it is. So here you can go short. I'm just going to go back in time here. You can go short because now we have pretty much everything aligned. Do we all see it now? We have failure swings, our entry zone on the higher time frame alignment. We have our potential targets. We have a pivot low, untapped fair value gap. And so now I can go short, stop on the pivot high, and take profit on this low. But of course, we want to make sure, it's a proper risk to reward. I mean, we could do a risk to reward of 1-to-1 if that's more your style. That's still profitable technically. But perhaps, we can go for a lower target and get a better opportunity, right? So here you can put our stop on the pivot high, or you can adjust it accordingly if you want to get extra breathing room. I mean, putting it up here is, to be honest, really unnecessary, but you can put it a little bit closer and just give it that extra breathing room that it might need. So here, let's see what happens, right? We have pretty much everything aligned. Obviously, this is just a bar replay. It's not like live market, but it's showing you the concept and showing you exactly how it works. If we're aligning the time frames together, that's what it should look like, picture perfect. I hope this brought insight into how to incorporate higher time frame inversion fair value gaps with lower time frame IFVG entries. Just fractalizing the concept, but we're not specifically looking, and this is the main highlight, we're not specifically looking at the actual inversion to align that with the higher time frame. What we're looking at is the confirmation bar close with that pivot high or low, because the logic is very simple. If you were to trade the 50-minute and you took this inversion, where would you put your stop? Most likely the high, right? So because of that, we're fractalizing that idea into the lower time frame, and we're using that as an entry zone. So I hope this brought insight into how to incorporate that properly.